I'm going to start to see if this is an ideal setup for us. Let's see. I'm going to now draw my horizontal line here, and then another horizontal line there. And this is this horizontal line is 1.3899. So to put your stop, all you have to do is, if this is 1.3899, that's 10 pips below this line. So I'm going to put my stop, and I'm going to put the label so that you can see it. Stop at 1.3889. So that is roughly 10 pips below this horizontal line, right? Now, of course, this is not an ideal setup because this is less than 30 pips. This is from 899 to 876, so that's about 20 plus pips. But for this particular case, I'm just going to say, okay, let's go for that. Okay, so to estimate your stop, you basically put your first stop 10 pips below this line, and simply put, wherever you put your stop, you also put an entry order to sell at that price, 1.3889. Okay? And the rest, as they say, is history. So I hope I answered your question, Benjo. So let me get back some more questions here. Okay, so Pierre is asking, do we have to use other indicators or do we just depend on the trend line? Very good question, and I have a very good answer for you, Pierre. You don't need to use any other technical indicator. 3 lines will do for this technique. But as I said, the technique is only going to be used on certain situations. So when you have a nice situation and a nice setup, as I mentioned a while ago, then just use your lines, and not just your trend line, but also your horizontal lines, and you should be good to go. Okay, thank you, Pierre. Pierre says he sees. Thank you. Thank you, too. All right, so let's proceed. We're going to do some more back testing. So let's complete this. You should be still seeing my euro-dollar hourly chart. Let's complete this. And let's see if we're going to make some money or we're going to lose some money here. So I'm going to now, let's say I'm going to buy here. So market order to buy. And my stop is at 1.3889. Then I'm going to put my limit 1. Okay, so putting things together a while ago, I'm going to draw my horizontal line there. That will be limit 1. Horizontal line here, that will be limit 2. Okay, so I'm going to now put M limit 1. M is market order limit 1. And then M limit 2. So that is the second limit. So we have now our primary order complete. Then the next is we have to now complete the entry order to sell. That's the stop and reverse hedge. I'm going to now place my stop exactly where I bought, E stop. And then I'm going to put my limit over here, E limit. Okay? So the complete order is to have a market order as your primary order because we're trading with a certain direction. And the second order is to place your entry orders because this is basically your insurance order. We know the direction, but we know that any given time the markets can reverse on us. Therefore, we have an insurance order. Okay, let's see if we're going to make some money. Yes, we hit limit 1. Fantastic. Once limit 1 is hit, remember, remove your entry orders because that is no longer needed. And you move your stop to where you broke even or where you bought, or if you want a little higher to protect some profits, and then let it run and let limit 2 get hit. Let's see if we get stopped out. Yes, we do. We get stopped out. No issue. We got some money outside, but we never needed to use your entry orders, stop and hedge, stop and reverse entry order hedge. Okay. All right. So someone's asking, Ritesh, hey Ritesh, how are you doing? I'm not clear with the place you are buying. Okay, sorry. Let me be more accurate here. Where should you buy? Very simply put, let's review again. Let's say this is where we bought, right? Let's say here. This, my friends, is a bounce. If you remember, a bounce happens when the price touches support from red and then turns to blue. When the candlestick turns from red to blue and the price closes as blue, then where we buy is where the price closed, at the blue candlestick. Now, of course, you won't be able to buy it exactly at the close unless you're Superman or Flash, that you can really just click your mouse exactly at the close. But what we want to do is estimate that where it closed, and I'm going to go click on this to show you the close. The close price is 1.39. Let me be more accurate there. If you look at your cursor data, let me move the cursor data closer. When the price closed blue, then it closed at 1.39. That is more or less the area where you should buy. Okay? So you buy at the close price where there is a bounce. Now, for those of you who have taken the CFTC, we can all see that this is actually what we call a piercing line pattern, which is a high probability bounce. And once you see a piercing line, you put your buy there, and then you put your stop about 10 pips below the lowest point, which is exactly where the horizontal line is. And that is how you buy. So Ritesh, I hope that I was able to answer your question more exactly. Fine, sir. Very good. Thank you. So any more questions, guys? Okay. If you have questions, just type it in, and I'm going to answer it as soon as I can. And let me proceed with how to do this some more. Okay. So I'm going to go now and go to the extreme. When I say extreme, where we are right now for euro dollar. And euro dollar, as you can see, it's a wild ride right here. And what I'm going to do is I'm going to place, this is the current setup right now. I'm going to delete that. This is the current setup. And I'm going to now start, hold on, drawing my lines once more. So I'm just going to start here. Okay. Then I'm going to draw another one here. And that should be fine. So I'm going to just go with this. Delete this one. And just go with this, right? Okay, as you can see, the price is all the way up there. And if I were to buy this right now, I simply can't. All I'm doing now is preparing myself. Okay, so basically there's a 3-line setup, trend line, 2 horizontal lines, and you're good to go. Now, if I were to measure this from this low point, that's 1.4091, to that more or less one impulse, this is the high point of that impulse, 1.305, that's definitely more than 60 pips, so that's ideal. The higher, guys, the higher the distance between your low to the high, the better it is for this trend, this technique. Now let's measure the support 1 and support 2. Let's see how big the difference is. That's definitely more than 30 pips. And that's also good. The bigger the space, the bigger it is for us. So what we're going to do is, if you're looking at euro dollar now, and the momentum is clearly up for euro, you want to wait for it to touch this line, bounce it. The moment it bounces that, so I'm assuming that it'll bounce, right? So I need you to activate your imaginary glands. So I'm going to now put my horizontal line as if it has already bounced there. And I'm going to measure it again. So let's say this would be the peak, and I'm assuming this will be the high. So this is your low, 4206.